Hi, this is Boyan from Vanguard Computer Systems. Today we'll talk about consolidation of financials in Sage 300 CRE when multiple data folders are used. Typically, when you're implementing 300 CRE, you'll make a note of requirement that all entities, all prefixes, all companies need to be in the same data folder in order to consolidate financials. However, there are processes in place that you can deploy to allow you to consolidate your financials even though multiple data folders are used. Certain requirements have to be met though. First of all, GL structure must be identical in all data folders that will get consolidated. Another requirement is that prefix A, let's say prefix A is 10 and that's your legal entity, cannot be the same in any of data folders. So you have to have a different prefix numbers in different data folders that you're intending to consolidate. For example, prefix A in data folder X is 10, prefix A in any other data folder therefore cannot be 10. Entities must be in the same accounting period. So your month end should be the same in all of them. Fiscal year end should be the same. Ideally, base account should be the same in all data folders. It's okay to have a different base accounts in different data folders as long as they are not overlapping in a way that same account means different things in different data folders. Try to stay away from that. It will make consolidation much more difficult. And finally, consolidation process can be done only when users are not locking GL master file in originating data folders. Typically, initial steps of consolidation is done after hours, and you'll see when we go through examples, when you start copying data between your live data folders and your consolidation data folder, your GL master file has to be free of any locks. So let's look at the setup in Sage 300 CRE. We have two data folders, Timberline Construction and Timberline Development. These are live operating companies. West Coast Properties is consolidated data folder. So you're going to start the process by creating an empty data folder for consolidation purposes. In our case, that's a West Coast Properties. In Timberline Construction, we have a prefix 10 that we're going to consolidate with a prefix 21 from Timberline Development data folder. So again, prefix 10, company number 10, Timberline Construction, from data folder Timberline Construction will be consolidated with the prefix 21 or company 21 from Timberline Development data folder. Again, as said in the earlier notes, certain requirements have to be met. Companies have to have the same period end date and same fiscal ending date. They have to be of the same structure. So GL accounts in those two companies have exactly the same structure. 2 digits for company, 4 digits for base account. The process will start by copying a company's journals, base accounts, and eventually accounts and balances from originating data folders, operating companies, into consolidated data folder. So on the GL setup, copy charter accounts, and again, we are in Timberline Construction Company as originating company. We're going to pick West Coast Properties as a consolidating entity or company, and we're going to start copying different components of our GL. First, we're going to copy company records. Then we're going to copy base accounts. Journal records can be copied as well. Not necessary step. Not bad idea to do it. And finally, we're going to copy accounts and related amounts. In preparation for this video, I have already copied company, base accounts, and journal records, leaving accounts and related amounts to be copied from originating company into my consolidation data folder. Please never ever click this delete records after copying checkbox. That's the checkbox that should be left alone, otherwise you're going to delete accounts and related balances from your live data folder. So, select accounts and related amounts, click OK, and then under ranges or conditions, you pick a company that you'd like to copy over. In this case, I can say conditions, company equal 10, and I will click on Start. This process will now copy accounts and related balances from my Timberline Construction into my consolidated entity called West Coast Properties. We'll flip data folder now to Timberline Development and do the same step. General Ledger, Setup, Copy Chart of Accounts. We're going to copy from Timberline Development into West Coast Properties. Select Master File there. And again, company base accounts or journal records have been already copied. Now I'm copying accounts and related amounts. Say OK. In this case, the only company that I have in data folder Timberline Development is Company 21. For the sake of consistency, I suggest that we still click on Conditions, Company equal 21. OK, and click on Start. Before we review results in a consolidated entity, let's look at the financials in originating entities. So we are in Timberline Construction. Let's go to Reports, Financial Statements, and run Income Statement for company number 10. And if you observe results here, you'll see that company 10 has a few entries as of January 31st, 2024, where net income is totaling $340,000. If you flip companies to data folders rather, to Timberline Development, run our financial statements from there. Let's look at your income statement for this entity. And let's print preview. So this is income statement for Timberline Development. Few entries on P&L totaling $400,000 in net income end of January 31st, 2024. So let's review results in a consolidation data folder. Again, we called it data folder West Coast Properties. In addition to having copied GL accounts in companies 10 and 21 from respective originating data folders, we also created a company 99 or entity 99 in this consolidation data folder. That entity 99 is meant for elimination entries. It's created as any other company, any other prefix. Fiscal year end and period end date needs to be the same as the period end dates and fiscal year end companies that we are consolidating. So, company 99, company 10, and company 21 exist in consolidation data folder now. So let's run the financial statements in a consolidated data folder. First, let's run the financial statements for respective entities, company 10 and company 21, just to verify that balances in consolidation data folder are equal to a balance sheet and income statement that we run into originating data folders. So income statement for company 10 should read $340,000 of net income, which it does. So let's run one for company 21. So the GL, reports, financial statements. We run an income statement for company 21 in this case, and this should give us a $400,000 of net income. So now we verify that balances that we copied over from originating data folders into destination data folder, which is our consolidation data folder, are the same. So now we can run comparative financials here. In Timberline, we call them, in Sage 300 CRE, we call them entity comparison financial statements. So financial statements, comparative income statement, and we're going to preview. We're going to see now that we have a column for construction company, column for development company, and a total column that combines balances between those two entities. Having base accounts the same really helps aligning those balances between two entities. If you look at this from a balance sheet perspective, let's run a balance sheet now. And let's look one without elimination entries being considered. When we run a balance sheet here, you'll see that we have a column for construction development and then consolidated column, but you'll also notice that we have a due to from balances in respective entities not being eliminated. So construction, due from, development, due from, and on liability side, we're going to have a due to for construction and for development company. In order to eliminate those entries, you can book those eliminating entries in company 99 And what we did here in preparation for this presentation, entry was made in a company 99 to eliminate intercompanies. So that's a simple journal entry where you book your elimination between entities. And as you can notice here, those entries are booked into entity 99. So when we run financial statements now with a little bit different layout, we're going to run balance sheet that will include elimination entity. You'll notice now that we have 4 columns: construction, development, eliminations, and then consolidated balances. You'll see that the due from interco account has been eliminated here, reading 0 on asset side, and same thing would be on liability side. Due to would be eliminated through elimination company, giving us clear ending balance on the consolidated column. In the recap, there are a few additional suggestions we'd like to make. Just follow best practices when it comes to the system maintenance. Make sure that full backup of respective data folder is made before you're making any copies. Make sure that you never click on the delete account after copy checkbox when you're making copy, otherwise your accounts will be gone from your live data folders. Make sure that you close your periods consistently in all 3 data folders in this case. So close your periods in your consolidation data folder, close a period in your originating data folders, making sure that period end date is the same, and of course you follow same fiscal year end date. So thank you for watching.